Hey guys, hope you're having an amazing day. In this analysis, we're going to take a look at gold, US oil, and Bitcoin as usual. If it's the first time you're just joining us, if you find this content helpful, please like, share, and subscribe. And also, if you'd like to learn how to trade like a professional Forex trader, or you love what we do here and would like to replicate all of those things, please subscribe to our membership platform on nfxup.com. All the links are going to be in the description below. And lastly, if you want to stay up to date with our activities, live chats, analysis, signals, all for education purpose, please join our Discord community. All of those are going to be in the description below. So check out that after the lectures, after the analysis. All right, guys, cheers, and let's get on chat. All right, guys. So on our chat here, we're seeing the kind of Bitcoin, but I'm not gonna start with these. This is gonna be the last chat. So for now, we're gonna start with a chat on gold because that's like a very very interesting one. So last week I was unable to post any weekly market forecast, and that because I was very very busy. But at least I was able to send some of the chat updates in our Discord community, and that's the reason why you should be in our Discord. So today, let's just get on chat and see what happened with gold. So last week we saw gold rallied a little bit, and then we had the short-term decline. Now, majority of everything that we experienced this or last week or this week, whatever, depending on when your day started, your week started stuff. Everything happened mainly on technical analysis, not really much of fundamental factors that really affected the market. So for a start, we had a long-term chart. This let's start from the most recent and then to what happened before then. So this week we saw this. Yeah, on Monday we had price rallied up to 29.40 for the first time, and then we saw a decline. Regular price consolidation. We tested this highs of 24, 29.40 again. Didn't break, held for a while, and then we tried again for the third time. So it held for a couple of times, and the last time we saw the highs of 29.50 before the Friday market close, and saw price drop that at 29. So it is clear that the market is fully rejecting this thing, and the bears are not the bears are not giving the bulls are unable to push the price a bit higher than that. So it means likely I'm expecting that this coming week we should see price start to drop. We should see price start to drop because last week we saw the RS at over 70 already. And that was when we saw the major decline start to happen from Monday. So on a second look, whenever it does, it's always going to zoom out. So when we zoom out to the daily time frame, then it becomes much clearer here for us. So the first thing we're seeing here is the fact that following this bull trend, we saw gold enter into a symmetrical triangle, and they broke up from the symmetrical triangle. That was 2 weeks back or 3 weeks back, I think, on January 15th. So taking the height of the triangle, which is the regular thing to do, let's just duplicate this and put it somewhere around the breakout level, which is around here. So we can clearly see that based on the height of the triangle, this is already satisfactory enough. Let's take this and we'll merge it here. So we see price is already satisfied the regular chart pattern formation because we are fully working on technicals because right now a lot of things don't make sense. Trump is still pushing for the global tariff, and that's already putting a lot of fear among investors. And investors are scared to really, think about long-term international trades or business. It's bad for the economy. It's bad for everyone, and that naturally going to mean that people will always run after safe haven assets, and that's the key reason why we're seeing gold appreciating value. Gold has been in the long-term bull run, and this is it's overwhelming, and I think it's actually even due for an end. But until there's more clarity in the market, we'll see gold likely want to get higher prices. So the end of February, I'm really not so I can't really say so much confidence about gold market movements. Just on the technical aspect, we can gold intraday trades and see the best we can catch up on the market. But long term basis, we really need the market to get a clear direction. There should be a clear ease on the global tariffs or a clear direction of where this is going to, how it's going to help the economy or global economy grow. Right now because there's too much chaos in the U.S. and Trump's still yet to complete his 100 days in the office. So let's look forward to February ending. By then, we should have a clear, at least to a great extent, a clear idea of what this tariff is going to be all about. It's all talks and no actions. Or if it's going to push forward, because Trump may likely stick with his ego, let's see, then we'll likely extend to match. The bull run may actually continue to match. But for the meantime, we are long overdue for a correction. So we can see market is still above 70 RS daily time frame, which likely means that we should expect some drop down. But like I said, we're not in a regular market, we're in a bullish market, so sometimes we may not get that drop down. But if what happens this week continue or holds, we had multiple tests this week. Like I said, we had it here. I'm gonna quickly pick out my two. We had one here, we had another one here, and then now we had another one here, just copy paste. We had another one here again. So these are like our key area of focus. And from these three zones, we can clearly see that price is failing to break above the resistance zone. The resistance zone is fully tight. So I'm going to click on identify that so it's easier for us to see. Take out this one. We don't need it on here for now. So these are resistance zone right now, and we can clearly see the market is still around a resistance zone and it's not breaking yet. So if this fails to hold, if this fails to break, then we should see price likely start descending downwards. Now, for me, I'm actually I don't really want. I don't think this bullish move from Crude is should continue. I think we should see a good reversal coming up very soon, and I'm looking towards that. But if this does not hold, if this does not break, then we should expect that bearish decline. For now, we should expect a short-term consolidation. So I'm actually looking towards a decline this coming week for crude, and um, and if we get that decline, first I believe we should work with the trend line. So if we go back to the forward time frame, and we pick this forward time frame, we can clearly see this, and then it becomes much clearer, and then we can expect to get this, let's get this trend line, like price should drop to towards around 28.80 for a start, and likely further decline towards about, towards the next support zone, which would be uh, uh last major highs somewhat around this level. Yeah, so this could be a new support level, and if that happens, this is what we should expect price to settle for 2800, most likely 2800. And if that happens, that will be good. And then after this, we can expect another, return of the trend, in a bullish state. Well, if this doesn't happen, well, gold could just keep going up. That's a very big thing. And lastly, on the fundamental aspect, there's been Trump has been pro end of this whole Russia-Ukraine war, but from the recent remarks from Zelensky and the EU, I don't think it's likely gonna end for now. There's still some politics about all of this, so uh, fingers crossed, and let's see what this week brings for us. So, guys, that's all we're gonna be talking about for gold. On the daily, on the hour chart frame, we are expecting a possible decline this week, and as the month ends, if the Trump's tariff reduces, if the whole talks about tariff is, like like BS, we just expect that we should see further decline of the gold because gold has it's already has a very very ridiculous all time high. So guys, the next thing we're going to take a look at is US oil. Now US oil is very interesting. Now this week was really terrible. For the fifth or eighth consecutive times, USOil, the US inventory report has been declaring surplus. So if this is true or not true, it's none of my business. But even before Trump got into office, and even while he got inaugurated, he has always been against high oil prices. He has always been pushing for low oil prices, and he hasn't stopped because since January, we've been seeing steady decline, and excessive supply of oil in the U.S. reserve. So I'm going to go through the economic calendar chart. So if we see this. This is a last report for that was last week Thursday or last Thursday. It was about 4.63 million barrels. That's way too much. I mean, to check the market, like for the past eight consecutive time, we've always been way above forecast. That's terribly bad for crude. So um, it's hard to even stay optimistic about crude anymore. Now, one of the key reasons why I've been a bit, is like, you know, not wanting to take a bull trade or buy trade on crude because we still aren't I mean, sell trade on crude because we're still around our yearly support zone. And prices yearly support zone, it's very risky to think about because we could either get a break or we could actually get a full rebound. So and if you check the chart, it's a descending triangle, and let's see what happens this week. But I think our stance on the bullish crude is actually going to change. We're going to be a little bit more bearish and look for more bearish opportunity because in our platform we're not really taking any sell trade on crude for a while now, and because we've been more looking out for the buy since we're in a support, so which is a very safe trade to take. But then we also have to take a look at the buy position as well. So if we see crude fall lower, because right now we're in the same wedge, and I'm thinking this wedge is going to hold for a while. So if we get bounce off again, since they're on a support zone, or if it breaks a bit lower, we should be looking towards $67 So if that happens, then most likely we'll see price sustain around this level again, then rebound. But well, no certainty. If further crude reports for the next couple of weeks are also bad, then this could likely break below. So for now, I'm a bit very bearish on crude. I'm expecting that most likely, regardless of the war and regardless of any other thing, most likely the price of crude will keep dropping because the US, which is one of the biggest important exporter of crude as well, they have an excess supply, and that's something to worry about. And even if the war between this Ukraine Russia gets lighter and the Russian oil will being allowed, to come back to the market, that's going to increase the supply of oil in the market, which definitely going to push the price way much lower than what we have it today. So guys, you gotta be very careful with crude and play smart or trade very smart when it comes to this crude oil. So on the daily time frame, I'm going to show you guys something on daily time frame, so to make this very clear. Now, I'm not going to change my last analysis as well. If you pay attention to this closely, you can see we are still in the descending channel. We're still in this. I'm going to take out all of these things to make it much clearer. So we're still in the descending channel, and nothing. We haven't broken up on this channel yet. Price is still consolidating, and we're approaching the apex of the channel. So maybe by February or latest March, we should fully know if we're going to be going down for lower prices or we're going to sustain this level and break out above. We had the test around here in January, which was fake outs and they didn't hold for long. And also, we've been having a couple of fake outs in the lower time frame as well. And so far, the bearish stance on crude has been very, very dominated. So we could see more lower prices in crude. And yeah, that's all for crude. So the last thing we're going to be taking a look at is going to be your Bitcoin. Now, uh, Bitcoin has not really done anything significant. It's been consolidating for a very long time, and it's a very depressing time for crypto traders because when the market is not going up, when the market is not going down, people get confused. We are used to seeing markets either dump 80% and recover. But right now, we're not seeing any major dump, and we're not seeing any major rise. We're just in these states of of oscillation. We're just in the states. So this is exactly where we're at. Price is not going above, it's not going below. It's just ranging. And this is also a typical accumulation stage where people accumulate more Bitcoin before we get it bust out. So I'm hoping we get that bust out in March because the bull run don't have so much more months left to go. I think maximum we see the bull run is going to last like 18 months after having, and having was last year April. So towards October, November, September, October, November, we should be maxed out. There should be no more. It's going to be very hard to get momentum to push price higher for Bitcoin. We start seeing decline in Bitcoin prices. So for now, I'm just optimistic and hoping that we get good recovery by March or from the end of this month, February, we start seeing some good recovery from March and April, and at least get a mid bull run before the final euphoric or that peak euphoric state. So for now, nothing has changed with Bitcoin. We're still where we are, regardless of the current hack we had with Bybit. The its hack. That was a lot of almost 450,000 hits was hacked, and that's crazy. But not really that was the general crypto market. It's hitting really rally because from what I read, the hacker burned the hits that it stole. So that was it. So still on the longer term charts for Bitcoin, we're still in the same thing, So we're still exactly here, and it's somewhat like similar to what we had here. And I'm hoping this sustains for a while and then continue to go up. That's the typical. I'm gonna use the waves 1, 2, 3, 4, 5, and that should be very clear. So yeah, so we got these so far. So we should be expecting something, like the longest wave, either the third or the fifth. So not so much has really changed, but since the beginning of the rally, we just have this. So this can't be the end of the rally. So I'm still expecting us to get something really good to complete this wave if we're gonna be working with that. So guys, that's all for today's analysis. Like I said, if you found this content helpful, please like, share, and subscribe. And don't forget, drop the like and drop your comment below, share your chat as well, and join us on our Discord platform, because there you stay up to date with all of our activities, all of our trades, and you also get interact with other professional forex traders. Cheers, guys, and see you all next week.